Welcome back to another session, guys. All about psychology. And in this session, I'm going to go over how you can go easy when the market is hard and how you can go hard when the market is easy. Because this is literally the secret. When you make money, you want to make most amount of it. And when you lose money, you want to lose the least amount of it. But how do you know that the market is easy now? Or how do you know when the market is hard right now? Because this will actually, if you know this, it will help you adapt your trading approach just based on the market conditions. But let me break down this actual phrase first before we move forward. All right. This phrase, we'll break it down in detail. So, this phrase, when we look at this phrase simply means um, two terms: hard market days and easy market days, right? So, the hard market days can be defined as, you can say, well, you know what? There's another thing that I've seen. I actually, there's a point in the presentation as well. The thing is, when the market is choppy, be honest, guys. Type in the chat. Has anybody ever gone through a day where market is super choppy, but you made money? You end up making money somehow. Not somehow. You thought you did everything right. You end up making money. And when the market is trendy, and you couldn't find an entry, hence you didn't make no money, or you, in fact you lost some money. So I've gone through this multiple times. Yes, right. So basically what that happens is, it's not that when the market is choppy that's when the market is hard. No. Or when the market is trendy that's when the market is easy. No. It's usually, I'll break it down what I mean. So hard market day simply means something like your system isn't performing the way that you the way that normally it performs. So when I say system, you might use ABCDs for entry. What that means is let the trend run, let it pull back to EMAs or whatever, and then push. This might be your system. Your system might be just break and a retest of an entry, right? That might be your system. So it's really not about what system. It's about whatever system you use. Sometimes if the system is not working normally what it usually will, that for you is a hard market day. Does it make sense at all? A little bit? I'll break it down in a lot more detail as we move forward, all right? And the easy market days is when your system just syncs perfectly with the market. I mean, you think of, if there's critical level breaks, let's say a huge level breaks, let it break, let it come back, retest, and then I'll take the play. And it breaks, comes back and retest, gives you a perfect entry, and you go long and you make some money. Works perfectly. Those days, I like to refer them as easy market days. So it's about whether, it's not about whether the market is choppy or trendy. It's about how you, or how well you align with the market with your system. All right. Now, the first thing that we want to do here is you need to learn when to go light and when to scale up your efforts for maximum returns. This is literally the secret. But how are we going to do that? Um, I'll break down in this session. All right. But first things, there's two questions that usually get asked about these two topics. How do you recognize hard market days? How do you recognize easy market days? I'll give you three-step framework that I use. All right. If you can take some notes, please take some notes. This is important. And if you're watching this and you know you're not taking notes, I understand if you're driving or something, cool. But if you're actually sitting in front of your computer and not taking notes, what the fuck no, right? Just why waste your time? Just go, bro, watch Breaking Bad. Maybe better. Um, all right. How to recognize hard market days? Three step framework. How I know the market's being a little tough. Okay. First one, your system starts playing up. All right. So when your system starts playing up, what I mean by that is it's not actually delivering the usual results. Like today, we took three trades, right? For all three of them, we entered. The first trade didn't work. Sweet. Normally it should work. All right. Second trade, it worked. We took some a little profits, and then it just flips really quick. And then what happened? It went back in our direction. It's being deceitful, right? And the third trade, it stopped us out. went in the direction. So in my eyes, what I simply call these days is usually the system works. Every day I trade the system and it made me millions of dollars. The system works. But it wasn't performing the way that I liked for it to see. That's the first sign. And you do not need all three signs at the same time. No, any one of these three, okay, you can label that day as a hard market day. Okay. Second, it starts feeling like trades of trades feel forced, or outcomes are inconsistent. What I mean by trades feel forced, sometimes I don't know if you guys ever experienced this, but with me I've experienced this a few times, um, where I'll take a trade, everything looks good, and then while I'm in the trade, I'll look at the volume. I'll look at like on the red candle volume, the pullback volume, or I'll look at the move that we have made, or I'll see that we made a new high of the day, but the volume isn't actually there. But I choose to stay in the trade. Anybody ever did this? After you jump in a trade, you start looking at the trade a little bit like, man, it you know what? It doesn't really fucking make sense. Like the volume on the red candles is more. Um, we made a new highs. The volume isn't that sexy. The contracts are moving like shit. Um, the IV is super high, and every little pullback is hurting me more than it's actually paying me. All these stuff, if it's happening, and if you choose to stay in the trade after that, or even if you do not choose to stay in the trade, but when you see contracts are not paying, markets moving a little bit weird, there's huge wicks up and down. If you see any of that stuff happening, I label them as okay, market feels forced. Okay, those four, like where if you entered and the contract should have started moving, but they didn't, what do you call it? It's a trade they're meant to be working, but it's not the way that we thought. Even though the stock's moving in our favor, contracts are literally moving so slow, and stock makes a little pullback, contracts hurt. Why are we in this trade? Those days, I call them forced trades. We did everything right. It just market thinks of it like it's a forced trade. That makes sense. I'm sure everybody gone through this. Where shit just feels super tough to make profit from, even though the stock's moving. That second. And third one is, this is a little bit emotional one. I'm sure everybody has gone through this, including me. Questioning strategy. You start questioning your life pretty much. You're like, man, does this stuff actually works, or will my entry does my entry make sense? Does my exit make sense? Or you start questioning overall strategy. I have seen this happen in the chat a lot in the Discord, where I see people take trades which are not actually our system, and then me being me, I text them. I'm like, bro, what the fuck are you doing, right? And then it's usually like, hey, I'm not using that strategy. I'm using a different strategy, and then it's literally I have to remind them, bro, what happened when you used this strategy last time? Oh, I made a little bit of money, but you joined KCU for a reason. You joined my mentorship for a reason, because your old strategy didn't work. And just because we are going through a hard market phase where the market, system's playing up for a day, where the trades are feeling a little bit forced, you're throwing that strategy in the bin and picking up something that didn't work before for no reason. That makes sense? Where you start questioning, oh man, is this even system gonna work, or did I just get lucky? For even I go through these days when I have like couple red days in a row. It's emotions, bro. Anybody that tells you do not get emotional about money, bro, they have no idea. When you're putting a lot of money into a trade and the trade goes against you, the moment you enter and you lose $3,000 in like literally 15 seconds, how do you call that being emotional? But I got decent amount of money, and if I drop a $2 fucking coin when I'm in the store, I bend over to pick it. All right, because my emotions get in the way. I'm like, nah, I ain't leaving it just there. You get my point? So as soon as there's money involved, there gonna be emotions. So when couple days go by, my strategy is not working, the trades that I'm taking not working, I question my strategy. But that doesn't mean that I literally go all, wild and go revenge trading. No, emotions, having emotions is cool, but acting on those emotions is bad. Like, we all have emotions, man, right? How many times have somebody pissed you off and you want to just be like, man, I wish, I wish this was not illegal. You're like, I wish this was not illegal. I would have fixed you right now. We all get emotions, but we know how to control them, right? So same goes in trading. This is what you learn over time. You learn how to control emotions, and that's the third thing. The moment I start questioning my strategy on the day, where I take my first trade didn't work, second trade didn't work, third trade didn't work, I walk away. Any of these three, I label that as a hard market. That makes sense. Your goal is to recognize these days earlier in the day to avoid overtrading and compounding losses, and losses compound as well. What basically happens is you start your day with, let's say, $300 loss. Sweet. You take just $50 loss. It's not much, right? So this goes like this: you took $300 loss, you, you lost another 50. It doesn't feel like much. Then you lost another 40. Doesn't feel like much. Then you lost another 60. Still don't feel like a lot. But that amounts to, if your walkaway limit on the day is, let's say, minus 300, now you lost $450 or whatever. It compounds. It grows really, really quick. You don't want to be in that position ever, right? So in order to stop doing that, bro, one rule that I use, I call it 3 to 1. All right, 3, 2, 1. The moment I go to one, any of these three things, I'm like, okay, man, the system's playing up. I breathe 3, 2, 1, and by the time I say one, I have to close my broker. Literally have to press the cross. Use this. If you have a hard time closing your broker, use this rule. 3, 2, 1, bam. Just press it. Done. Cool. Now you know how to recognize a hard market. All right. Now what to do when the market is hard? I gave you guys what hard market means, how to recognize it. Now, what should you do when the market is hard? Number one, go easy. The market is hard, you go easy. What I mean by that is reduce your position size and limit the number of trades. For example, with me today, I took my first trade, it didn't work. Second trade, it worked because I still was able to take some profits. Third trade didn't work. Now, my trading rule, the rule that says is if I have three losing trades in a row, I call it a day. That means I still had room for another two trades. Yeah, because my second trade worked off with AMD. But did I take another two trades? No. Why not? With me, I limit my number of trades the moment I realize the market is being hard. I realize systems playing up. There's no point. Why do I have to go try to prove a point on a day when shit's just not working? Right? And then the second point is you focus on quality. Bro, focus on quality over quantity. These numbers are there to fucking protect me. But still, I'm the boss. What's the point of me working for myself, trading, if I cannot fucking walk away when I feel like? You can literally clock out at any time of the day. There's nobody that you have to ask permission from. Think about it, right? And then third one, avoiding emotional decisions. And the only way you can avoid these decisions, emotional mistakes, is you stick to your fucking rules. You play defensive the day the market is hard. And what are the rules? What's the first most important rule? Use a system. Like, for example, in KCU, we use LTP system, right? Just because couple trades didn't work, that do not mean you do not you stop watching one of these things. Like levels, sweet. Trends is still important part. I see people do this where couple trades do not work. They throw trend out of the way and they just start trading patience candles. And hence, what happens? It doesn't work. And what happens then? It hurts their confidence even more. What happens then? Oh, maybe the system doesn't work. And you go back, this is happening on a day. Then you start forcing your trades. And when now you're forcing the trades with partial system. And what happens then? Then you question strategy. And then you blow up your trading account. And then you text me, bro, your system doesn't work. Fuck you. I'm like, bro, what did I do? I didn't do shit. You get my point. It's just if you're gonna use a system, if you're gonna do something, man, you may as well do it the right way, and you need to stop avoiding those emotional decisions. Of course, when you take a losing trade, of course it feels like, man, somebody just told, like, told you on your face like you're wrong, and you want to fucking try to prove them a point that you're not wrong, or whatever. And you want to take a trade straight away, you jump out of a losing trade, you straight away jump into another trade just because you want to make the money back and you want to feel good again. I have made those mistakes in the past where I'll jump out of a trade and I lost some money and I'm not even waiting for the setup. I jump into a trade just because I want to feel good about me again. But if you, and this is the mistake that happens when you literally put all your self worth, and this point might hurt. This is the stuff that happens when you put all your self worth into being profitable or being in a loss on the day. If you're in profit, you feel like, man, I'm the good. Hey, look at me, I'm the fucking big shit. And when you lose some money, you feel like you're a piece of shit. And that happens when you put your self worth on a number. Think about it. Anybody does it? Hey, who does that? Be honest. That used to be me. You know what happens then? You make emotional mistakes. You know what happens when you make emotional mistakes? You start feeling more like you feel more like I'm a piece of shit. You know what happens then? Next day you show up trying to prove to yourself that you're not a piece of shit. What happens then? You're in this trap trying to prove a point to yourself. And then you blow up. Huh. Now you are a piece of shit. You get my point. But the whole thing starts from when you have your self worth on a number. Not every day is you're gonna make money. And that's just a fact. Hard market days are about survival, not maximizing gains. All the beginners, people who start trading, bro, all those beginners, they put their numbers, their self worth on a profit or loss basis. You gotta be better than them. Because guess what? You're just taking their money away from them legally. This is the stock market. You legally allowed to fucking rob people. Right? And I fucking love this game, yo. And most amount of money you're gonna make is when most amount of people are losing the money. And more the pain, more the gain. So write down all your habits that you do now. If you're not if anybody listening to this video right now, if you're not profitable, write down everything that you do now. Just do the opposite. If you're jumping in beyond your stop loss, do the opposite. Jump in when the trade's working in, like you already in, trade's working in your favor, keep adding. Why not average up? Why average down? Just do the opposite across the board, whatever you do. All right. Now the question comes: how to recognize an easy market? You're gonna love this one. First point: it's just exactly opposite from hard days, and this will make sense. System performance. Your market is just performing seamlessly. Trades align perfect. Market movements, everything good. You're able to make money quick. So that means Basically, as soon as the market opens, within 10-15 minutes, it gives you an entry, you take the trade, you make some money. Quick. Hey, how many people here have gone through this where market opened within 15 minutes, you took a trade or two, both trades worked, and you already making money. Within 15 minutes, you made more than you will make 8 hours at your job, right? And that's simply in my brain. Any of these three is happening, I know market's easy. And this has to happen when, because I actually have a slide for this as well. Now, market conditions feel in sync with your strategy, making execution effortless. And hey, type in the chat. Have you ever felt like you made some money in the market and you feel like, man, this was the easiest money I've ever made? This is the easiest money I've ever made. This trade worked the moment I jumped in. It went to my profit target. I got out at my profit target. Oh my God, this is like literally the easiest trade I ever made. Yeah. That means your system is in sync with the market. Those days is what you need to learn, and you will learn this over time. It doesn't happen straight away. You will learn this. You will learn how to recognize that opportunity, and you will learn how to fucking capitalize on those days. You will fall in love with making the most amount of money on those days. When I see within first half an hour, I take 2 or 3 trades, and and both 2 or 3 all the trades that I've taken worked. In my brain, I'm thinking, man, it could be another 20-30 thousand all day, because I feel any one of all these three sometimes, and or sometimes I feel like, man, I took 3 trades, 2 of them worked, and it's only been fucking 40 minutes since the market opened. You know what? Sweet, let's stick around. Or take a trade, it just feels effortless. I'm like, bro, the moment I entered, it worked. Wow. Or it just feel like wherever I look around in the market, doesn't matter if I caught the trade or not. Wherever I look around, my LTP system's working. I'll see this chart, this chart, this chart everywhere. I'm like, Jesus, the system's working across the board. So when I see that, I label that day as easy market. Does that make sense, yo? Type in the chat. Makes sense. So far, everything clear? Okay. Okay. Now the question comes, what to do when the market is easy? Huh. I got 5 points for you. First, when the market is easy, you go hard. Simple. Don't overthink it. You go hard. But what do I mean when I say go hard? Huh. How do you go hard? Like, what the fuck? Right? You increase your position sizes. What I mean by that is you use your early morning gains as a cushion for moving forward. So let's say you took 2 or 3 trades before you realized the market is easy, and those 2 or 3 trades worked beautifully. And if you made $50 on each of those, that's $150, right? Now you can use that as a cushion for moving forward trades. So if you made $50, let's say that's 10%, that means if your position size was $500, now you can be like, you know what, I'm gonna do $1,000 position size. And if the trade doesn't work, let's say if I lose 20%, that's $200. But I'm not losing the whole 200 because I'm already up 150. I'll be down minus 50. Cool. What happened here? You tried to avoid the fall. Straight away, you went from falling on an actual concrete floor to now falling on an actual net. That makes sense? It's a cushion that you landed yourself. But think about it, if that $1,000 position size that you took, if that trade worked and it went 30, 40, 50%, huh, what happens? 150 plus 450 or 500, whatever it is. Now you're up $600 on the day. Boom. And then comes hold your trades longer. So 450 initial profit targets. Let's say you took 250 off. That's $400 on the day. Yeah, $400 on the day. Now you're holding the trades longer because you took a little bit bigger position size. That means you have more contracts. Now you're holding the trades longer. If the trade goes against you, your break even is the stop loss. Yeah, that's negative risk management. If we enter a trade right here, um, and you did 10 contracts, and these are your profit targets, the moment it hits your first profit target, you take 5 off, 50% off. But your stop loss is break even on the option contract. So if it reverses here, break even hits, sweet. You still walk away with 400 bucks. But what happens if it keeps going to the next target? Out of 5 trades, 5 contracts, you're going to take another 50% off. Now, you cannot take 2.5 contracts off. You have to either choose 2 or 3. I always go with the one higher. So I'll take 3 off here. So me taking 3 off here, that means I have added another, let's say, 150 bucks to the bottom line. So now I'm up 550 and I'm holding 2 contracts. Stop loss, still break even. Goes to the next target, I take one more off. That's another 150 bucks because such a huge move. Now I'm up 750. That's how you make money, yo. And now I understand. Some of you are gonna be like, but bro, for me, it never happens. My runners never run or shit like that. This doesn't happen every day. You think of this shit happen every day. No. It happens maybe 3 or 4 times a month. Because you expect it to happen every day, your expectations hurt you to a point when it actually has to happen. You are not in the trade. You know why? Because your expectations on previous days has hurt you. Now for you, expecting it fucking hurts. But think about it, yo. The best thing that you can do is you jumping in, and it's negative risk management for a reason. Even if the trade goes against you, your stop losses still break even. So you letting the market choose if the trade is a good trade or a bad trade. If it's a good trade, it'll keep fucking running. It'll make you a lot of money. If it's a bad trade, it'll go and hit your break even, right? Would you rather stay in a bad trade for a longer period of time? No. Let the market tell you, okay, it's a bad trade. Jump out. Sweet, jump out. Why let the emotion jump in? That makes sense to anybody, right? Okay. Does the break even move up from the original entry because of the Greeks? No, break even on the option contract stay the same. We doing option contracts. If you entered at $86, now price is at 250. Yeah, sweet, whatever. $86 is entry. Now by the time you this your entry, this will be your exit for the break even. Now by the time you exit, you might get a fill price of 180. Shit happens. This is like the cost of slippage or whatever you pay. By the time you jump out, it's never gonna be 186. It might be 180. Sometimes it might be 175. Whatever, right? Sometimes it is 185 or whatever. All I'm trying to say is, in theory, that's your stop loss and never going to be perfect. Stock market's never perfect, right? The actual stop loss, because we're not actually putting the stop loss in the system, we actually have a mental stop loss. So you're watching the trade go, you know where your stop loss is, let it keep going, keep going, keep going. If you're only holding 1 contract, you can essentially hold till it's breaking the structure. Okay, but this is technical stuff, and I don't want to get into too much technical. Basically, you hold your trades for longer period of time for bigger moves, and that 1 contract that you're still holding might be $300 by the end of the day, or it might be just zero. But you still made more money, and you taught your brain that it's okay to hold your fucking trades. And that lesson is more important than the money. Even if you made $1,000 today, you know you can't quit your job. But if you learn that lesson of holding your runners, by the time you actually have, let's say, $50,000 trading account and your position size is 5,000, now making 10,000 in a day, 5,000 in a day might be life changing, because 4,000 a day is $1 million a year. Boom. Right? And then comes adding to your winning positions. This is what you do when the market is easy. If you entered here, trade is going, and you've taken some profits, by giving you another entry, why not add? When the market is easy, you go hard, and that's how you go hard. You add to your winning trades, you increase your position size, you hold your trades longer, you let your runners run, and you take calculated risks. Calculated risks means that, bro, you know what? It's time for me to maximize my gains on these days. And easy markets are rare, they only happen 3 to 4 times a month. But when it happens, you want to make the best out of them. But what I see with a lot of people is nobody goes broke taking profits. Bro, I have never seen any motherfucker who got rich taking small profits. Nobody. Have you guys ever heard of this guy who he co-founded Apple? I think his name is Steve something. He co-founded Apple. What's his name? But he sold. Um, hang on, let me find out. Guy who co-founded Apple. Yeah, Steve, that guy. Um, let's see what price did he sell his shares at, yo. Um, yes, Steve, the Wozniak guy. He sold Apple. Yeah, he sold Apple in 1985. It would have been worth $66 billion today. He co-founded Apple. He sold for little profit, and he probably said that at that time nobody goes broke taking small profits. I bet he feels fucking broke right now. I'm just saying. All right. Now, all these 5 points, yo, they go in sequence. Okay. The first thing that you do is you increase your position size a little bit, then you hold your trades for a little bit. You keep taking profits as the trades go up, then you keep adding more. Cool. But now, if you add it to 125 calls initially, and now the trade's going in your favor, you don't have to keep adding to 125. You can start building 126. You start taking 125 off because it's hitting your target. It give you another entry. You take 126 and treat this particular trade as a all individual trade by itself. That makes sense? Don't think of it like, oh, I added to nine. This is another trade. This is your winning trade already. This is another trade with a new set of stop loss, with a new set of profit target, which is the next profit target. Okay, you started selling this 125 because hitting your target. You started selling 126, and that gave you another entry. Start building 127 calls because the trade's moving in your favor. This might be in the money. This might be in the money, and this is at the money now. Start building your position, start riding the trade towards the upside while you're controlling the downside because this is called rolling your contracts further and further. All right, every time it gives you entry, go in the next contract. Sweet. So third partner sold 10% Apple for $800. Here you go. Would have been worth 66 billion. Oh my god. Right. And now comes the point. Now you know what to do when the market is hard. Now you know what to do when the market is easy. Now comes this huge fucking point, very important. And I'm so sorry, I don't want to swear, but this is some. I don't want to. I don't want to swear, but this is something that's super close to my heart, and I have made so much money just realizing and understanding this. Daily presence. When was the last time that I took a day off from the market? And you know, I trade every day. I show up every day. Every day I show up, and the reason is you can't predict when easy market day will occur. You don't know. So what do? You show up daily. You don't take time off. Now some people gonna be like, oh, but that leads to in internet gonna be like that leads to burnout. No, it doesn't. When you have a system, there's no burnout. When you don't have a system, there is burnout. You know why? When you do not have a system, that means you don't know what you're doing. That means you are leading off emotions, and that means you're using more brain than you should have. If you're actually just using LTP, bro, you're not using that much brain. You know where your entries, you know where your profit target is, you know where your stop loss is. No brain power used. But when you're jumping in and out in the middle of nowhere, there's emotions. And there's using brain cells that are getting used. And that's when you get tired. And on top of that, after doing such a crazy hard working day where you use all your brain power and you still lose money, oh my god, that leads to burnout. So I show up every day. All right. Then comes readiness. I say all the time that I want to take a day off, but I don't because I know for a fact the day I take off, then I'm gonna feel like shit later on because I will see the market. I'll be like, oh my god, I could have entered here and exited here. But I know it's not the right way to think, but I show up daily. It doesn't take that long. Hour or 2 hours out of a day. Man, I can do that. Second point, readiness. What I mean by that is by showing up every day, you're ready to seize the opportunity if the market aligns. Right? And the third one, mindset shift. You start treating every day as an opportunity to assess and adapt the market, not just to execute blindly, but see. Like, I see a little scanner in my eyes all the time. This scanner is trying to see either this is the market hard or is the market easy. This is what I'm noticing in the market. As soon as I start trading, yo, my market straight away goes, is the market being hard or market being easy? What's happening? That's the first thing I want to know when the market opens. First thing. So, for example, we might say when you drive, I don't know, I never drove a fucking truck before. So, when you're actually being a truck driver, I'm sure there has to be certain precautions that you use as soon as you jump in the truck. This first thing that you check. Yeah. Hey, anybody who's a truck driver, you might know, or anybody who any job, every job pretty much. There's the first thing that you check. There's the first thing that I need to check before I even drive my truck. That's a safety thing, right? Pre-trips inspections. There you go. Same thing in the market for me as well. These are my inspections for the market. And then the first thing I need to check is if the market being easy or is the market being hard. And I showed you guys both. All right. So this is done. Then comes start each day the same way. All right. And a lot of people have problems with this, including me. I had a lot of problems with this back in the day as well. And it's tough. But I'm going to give you the fucking steps now. Basic key principle here is you need to begin each trading day executing your strategy as usual. Just because yesterday the trade didn't work, couple trades that you took didn't work, that doesn't mean shit. Today it's a new day. Especially with if you have a strategy, if you have a system. Up until you know you can put a tag on the market as being easy or hard, you you take no bias trades. Nothing's in your brain. You start the day the same way. Let the market dictate from those trades. If you took the first trade or from first 20, 30 minute price action, then you let the market dictate if it's easy or not. Does that make sense? The moment you have a preconceived notion in your brain, you're gonna lose. The moment you go, oh, the market's so easy, but it's only been fucking 3 minutes since the market opened, yo. Oh, I made 10,000 yesterday. Cool. Oh, look at the market. I know what I need to do. I know what I'm doing. Hmm. But is the market easy or hard? No, no, no. I know what I'm doing. Yeah, cool. You made money yesterday, but today's a new day. And that's what happens with people who make a little bit of money in a month and then they lose all the money just because of that reason. You need to start each day the same way. You need to adapt based on the conditions, yo. Right? You adjust your trading intensity once you identify the market type. But you can only do that if you stay flexible. Stay flexible, avoid making actual assumptions earlier in the session. But how early is early? Usually, if what I say is if you take the first trade of the day, it's being a little deceitful, you can be on your toes. You can be a little bit careful. That means if you entered based on the strategy first trade and it didn't work, you're allowed to be on your toes. Sweet, no problem. Let me see. Let me sit back. Let me just ignore another next trade. Let me see. So if like for example today we took the trade. I took what was it, AVGO? Took AVGO. It didn't work. Then I wanted to take QQQs. But what did I say? I'm like, nah. Let me take a step back. Even though the trade looked good, I didn't take the trade. You know why? In my brain, I'm like, you know what? First trade of the day I took, it didn't work. Let me see what happens. Let me not make assumption if the market is hard. Let me see on this trade. I don't need to put my money in. If this trade would have worked, I'd be like, okay, this was just a trade that didn't work. The strategy, same strategy, didn't work again. I don't need to put my money in to know if it's gonna work or not. Now I might miss out on QQQ huge move. It is what it is. But I just wanted to see if the strategy. I'm like, nah, and it didn't work. I straight away went, all right, you know what, man, fuck it, done. This is the time to just be a little bit chill, a little bit relaxed. That makes sense to everybody so far up until this point, because I'm about to give you a next page. We're gonna go over a little key takeaways. All right, now you know how to what does it mean when I say go easy when the market is hard and go hard when the market is easy? You know how to recognize a hard market. You know what to do when the market is hard. How to recognize easy market. You know what to do when the market is easy. And consistency showing up every single day. And you need to start that every single day the same way. Don't change. Just because yesterday something worked, today don't be like, oh man, sweet. I don't need to do a brain dump every day. I don't need to make a plan every morning. I don't need to draw my levels every morning because I know what I'm doing now. Bro, what got you here? Like, what got you those results? If you stop doing those results not going to be actually be there anymore. I see this with people a lot. If journaling actually helps you get to the next level, they stop journaling thinking I don't need to journal anymore because I know my mistakes. No, you don't. As you go forward in your journey, bro, you're gonna start learning more by yourself because your old habits start getting fixed. You're always gonna have trading problems. Your old habits are fixed. Those are not problems anymore. But you do not know what you do not know. And the only way you're gonna find that out is when you journal. Alright. Last one. Key takeaways. Hard market days. How do you define them? You recognize when your system isn't syncing with the market conditions. Then you play defensively, reduce your trades, position sizes, and focus on protecting your money. Easy market days. Doesn't matter what strategy you use, yo. This is me assuming you know what strategy you're using. Because I'm gonna upload this video to YouTube. This is me assuming that you have a strategy. Okay, now easy market days, it just means when the market's aligning with your strategy, with your system, you increase your position size, you hold your trades for longer, and you go for bigger moves. Don't tell yourself that nobody goes broke taking small profits. Because yes, people go broke taking small profits. All right. The last one, consistency. You need to show up every single day. Every single day. That's a game we're playing. Now, because of your work conditions, there might be days where you can't. Cool. But if you're not showing up just because you want an extra fucking half an hour nap, bro, you don't have the work ethic. I wanted, bro. I ain't gonna lie. It was my wife's birthday. We had a couple of drinks, and I just was like, man, I don't want to trade today. I wanted to just sit down and lay back and just chill, relax. Now, I took trades, and I'm red on the day. Now I could have been like, man, I should not have traded, bro. I didn't know this beforehand. I could have made 20 grand today, right? But the moment you start putting numbers with actual things that you could have bought with the money, that's where shit goes bad. I'm sure anybody here, you guys have done this in the past where you lost, let's say 500 and you go, oh man, I could have paid fucking for a, new car for fucking this much money or whatever the crap you put the number to um, actual materialistic thing. That's where emotions really get to you. My rule is show up every day. I didn't want to show up today. I showed up. Like, you know what? I need to. And guess what? I learned a couple of things about myself. I journaled. We're doing this training. If I would not have showed up, this would not be possible. That's what you get for, just showing up every day. All right. That's all, guys. That's all I have for you. I don't know if this was up to the mark that I said it would be, but hey, it just what gives you little perspective on when I say go easy when the market is hard, but how do you identify those hard markets? And that's how you know. And I would do a Q&A now, but because this video going on YouTube, I don't want to make it extra long for no reason. We can do a Q&A later. And I got these slides ready in about 15 minutes. So not bad, not bad. And I'll see you guys later. All right. Goodbye. Peace. And if you're watching this on YouTube, make sure you subscribe and comment and like and whatever. All right. Cool. I'm out. Peace. Goodbye, guys. Let's go.